So concession rate of tax on interest on foreign currency borrowing on an Indian company on business trust. Interest paid by an Indian company or a business trust be a foreign company or a non-corporate non-resident can be subject to tax on the concession rate on the gross interest as against 20, rate of 20% on the gross interest applicable in the respect of all the interest received by non-corporate non-resident or foreign company from a government or Indian concern or money borrowed or debt incurred by the foreign companies. Tax is deductible on the concession rate, that is 5% on the following interest paid by the Indian company or a business trust with a foreign company or non-corporate non-resident. In the case of borrowing made by the Indian foreign currency from resources outside India, under the loan agreement of any other time for 1st July 2012 and 30th June 2023, by the way of issuing long-term infrastructure bond using the BA from 1st July 2012 to 30th November 2014, by issue of any long-term bonds including long-term infrastructure bond during the period of 1st December 10, 2014 to 30th June 2023 as approved by central government behalf. In respect of the money is borrowed by it from the source outside India by way of issue of rupee denomination bond and before 30 June 2023. The tax is deductible at the concession rate of 4% respect of the money borrowed by Indian companies or a business trust from the source outside India by way of issue of long-term bond or rupee denomination bond at 4th April 2020 and 30th which is listed only in the recurring stock exchange located in first IFSC. A tax is deductible at a concession rate of 9% respect of money borrowed by an Indian company or a business to some source outside India by way of issuance of long-term bonds or rupee denomination was due which is listed only in the recurring stock exchange located in the IFSC. The interest to extent of the same does not exceed the interest calculated at the rate approved by central government, taking into consideration terms of loans, the bond of repayment is subject to tax and concession at 5%, 4%, 9%. As the case may be put plus charge with the applicable plus health and education trust, or the interest payable of the Indian company or a business education trust to a non-resident, including a foreign company, in respect of the rupee denomination bond issued outside India during the period of 1st September 19, 2012, 30 June 2020, shall be exempt from tax, and consequently no tax shall be deducted on the payment of interest in respect of such bond in 194 LC. Non-applicability of higher rate of TDS under Section 206 AA of non-furnished ban. Section 206 AA provides if a person who is receipt on subject to reduction of tax at a source, that is, a deductee shall be mandatorily furnish a PAN to the deductor, failing which deductees deduct tax at source higher rate. A rate prescribed in the Act, a rate at force mentioned in the Finance Act, or the rate of 20. The levy of higher rate of TDS under Section 206 AA in the absence of PAN should not be attracted in the respect of payment of interest on long-term bonds under Section 194 LC to non-corporate, non-resident or the foreign company or other payment subject to the prescribed condition. For the purpose of reduction of compliance, Ordinance Rule 37 BC provided for relaxation of non-corporate, non-resident or a foreign company not having a PAN respect of payment in nature of interest, royalty, fees or technical services, dividend and payment on the transfer of capital is subject to deducting furnishing the following details documentary deductor, namely name, email ID, contact number, address in the country specified outside India on which deductee is a resident, certificate of being a resident in country in any country, certificate territory outside India from a document government of the country or specific territory of India on the country and specific territory provided by issuance of the certificate. Tax identification number of a deductee in a country or specific territory of a residence. In the case no such number is available, then the unique number of the basis which deductee is identified by the government of the country or the specific territory in which is claimed to be a resident. Interest on the government securities or rupee denomination bond of the Indian company payable to the foreign institution investor FIA or qualified foreign investor QFI. 194 LD application of rate of TDS. Section 194 LD provide that any income by way of interest payable during a period of 1st June 2014 and 30 June 2024, the respect of the investment made by the FIA or QFI in a rupee denomination bond of an Indian company and a government security shall be subject to tax deducted source at the concession rate of 5% as against rate of 20% of interest payable in respect of the other interest received by a QFI or FIA. The concession rate of TDS of 5% also available on the interest payable between 1st April 20 to 30th June 23 to the FIA and QFA reflect of investment made in the municipal debt security. Interest on rupee denomination bought on the Indian company to extent of sum does not exceed the interest calculation or the rate notified by the central government in behalf which is subject to a tax deducted concession rate of 5% surplus which is required or plus health and education trust. Time of deduction. Any person who is responsible for paying a person being an FIA or QFI any interest shall be a time of credit of such amount in the account of the payee or the time of payment of the income in cash by way issue of check or a draft or by any other mode, whichever is yearly deduct income tax therein 5% plus surcharge wherever applicable plus health and education says 4%. Meaning of FII and QFI. Serial number, term, meaning, FII, foreign institutional investor, specified by the central government by notified in official gazette. QFI, qualified foreign investor, shall means a person resident in the country that is complied with the Financial Action Task Force (FATF) standard and not on the signature of International Organization of Security Commission. In the multilateral memorandum of understanding, such person is however is not resident in India. The qualified foreign investor QFI or a foreign investor being a non-resident who meets a condition of know your customer requirement under the SEBI laws and hence permitted to invest in equities and debt schemes of mutual funds, whereby enabling Indian mutual funds to have direct access to the foreign investors and widen the class of foreign investors in India and debt market. QFI does not include FII. Municipal debt securities. It means non-convertible debt securities which creates a knowledgeable indebtedness and include debentures, bonds, and such as the security of the issuer. Other sum payable to resident, section 195. Applicable to any person responsible paying interest other than interest referred to section 194 LB or section 194 LC or section 194 LD. Any other sum for tax and other than salary to non-corporate, non-resident to a foreign company is liable to tax direct tax at source at the rate prescribed by the Finance Act, and such person who was required to furnish the information relating to the payment of any sum of such form and manner as may be prescribed by CBDT. Payee to non-resident. In order to subject to any item or income to deduct of tax under the section of the payee means non-corporate, non-resident or a foreign company. A payer may be a resident or non-resident. Under section 195, subclass 1. The obligation to deduct tax at source from the interest or other payment to a non-resident which are chargeable to tax in India is on the person responsible for paying to a non-resident or to the foreign company. The words any person include section 195.1 is intended to include both resident and non-resident. Therefore, non-resident is also required to deduct tax at source before making payment to another non-resident if the payment is represent income of a payee non-resident chargeable to tax in India. Therefore, if the income of the payee is a non-resident is chargeable to tax, then the tax to be deducted at source. However, the payment is made by the resident and non-resident. Explanation to clarify that obligation to comply with section 195 and to make deduction thereunder applies and shall be deemed to have applied and extend and shall be deemed to have extend all persons residents and non-residents whether or not a non-resident has resident or a place of business or the business connection in India or any other place of any other manner prescribed in India. Time of deduction. The tax to be deducted at source at the time of credit of such income to the account of the payee or at the time of payment thereof in cash or by which of check or draft or any other mode which was earlier. Where interest or sum which aforesaid is credited in any account, whether called interest payable account or suspense account or any other name. In the books of account, the person liable to pay such income, such credit shall be deemed to be credited of such income to the account of the payee. However, in such a case of interest payable by a government or a public sector bank within the meaning of section 1034-23D, a public financial institution within the meaning of section 1023D, deduction of tax shall be made only the time of payment thereof in the cash or by virtue of check or draft or any other mode. TDS and remit. Payment subject to tax reduction. The statutory obligation imposed under the section will apply for a purpose of deduction of tax at source for any sum being income accessible to tax other than salary income in the hand of non-resident or non-corporate foreign employment. Payment to non-resident by way of royalty, payment of technical services rendering in India, and commonly examples of some chargeable and asset provision, like which is liability of deduction at source, at source would apply. Certificate of non-deduction of tax at source. Under Section 195(3), any person entitled to receive any interest or any sum of within, on which income tax has to be deducted under Section 195 may make an application of prescribed form to assessing officer for grant of certificate authorizing him to receive such interest or any other sum without reduction of tax thereunder. Where any such certificate is granted, every person responsible for paying such interest or some other sum to the person to whom certificate is granted make payment, such interest or such sum without deduction of tax at source and section 190 payment as long as certificate is in force. Such certificate shall remain in force till the expiry of the period specified therein. However, if the cancellation if it is cancelled by the assessing officer before the expiry of such period, the certificate shall remain in force till its cancellation. The CBDT is empowered to make rules specifying the case in which and the circumstances under which the application made by the grant of certificate. While doing so, it should take into account the convenience of the assessee and interest of the revenue. Such rules should provide for conditions subject to under certificate may be granted and may other manner connection therein. Person responsible for paying any sum to a non-resident to furnish prescribed information. Section 195(6) provides that the person responsible for paying any sum, whether or not chargeable to tax under the provision of the Act, to a non-corporate, non-resident or to a foreign company shall be required to furnish information related to payment of such sum in the prescribed forms and prescribed manner. Specific class of person making a payment to a non-resident to mandate make applicable to assessing officer to determine the appropriate portion of the sum chargeable to tax. Section 195. Any person responsible paying a non-corporate or non-resident or foreign company any interest or any sum chargeable under provision of Act other than salary has to deduct at source and its rights in force. Under Section 195(2), where the person responsible for paying any such sum chargeable to tax under the Act other than salary to a non-resident, consider the whole of such sum would not be income chargeable to the hand of recipient. He may make an application in such a form or manner to the assessing officer to determine in such a manner as may be prescribed the appropriate portion of such sum as chargeable. When the assessing officer so determines the appropriate portion, the tax shall be deductible under Section 195 only on the portion of the sum which is so chargeable. Section 195(7) provides that notwithstanding anything contained in Section 195(1) or Section 195(2), CBDT may by notification in official gazette specify a class of person or class of cases or the person is responsible for paying to a non-corporate, non-resident or a foreign company or a sum whether or not chargeable under the provision of the Act and make application in the prescribed form and manner to the assessing officer to determine in a prescribed manner the appropriate portion of the sum chargeable tax. While the assessing officer determine that appropriate portion of sum chargeable tax shall be deducted under the Section 1, the portion of the sum which is so chargeable. Consequent, when CBDT specify the class of person or classes, the person responsible for making payment to non-corporate, non-resident, a foreign company in which cases to be mandate made an application in a specific manner to assessing officer whether or not such payment is chargeable under the provision of the Act. Accordingly, CBDT has inserted Rule 29(ba) to specify the following form and manner which applicable for assessing officer manner or determining the appropriate fraction of tax to be deducted source. The form and manner for making application. The application by a person for determining the appropriate portion of sum chargeable in the case of non-resident recipient under Section 195 to 195 Clause 7 has been made under Form 15E electronically under digital signature and through electronic verification code. Determination of appropriate portion of sum chargeable to tax after examining the taxability of the amount as per the Act and as relevant DTA. The assessing officer has examined whether the sum has been paid or credited the chargeable to tax under the provision of the Act read with the relevant DTA. If any, the sum is chargeable to tax and he has determined the appropriate portion of such sum chargeable tax. Issuance of certificate determine appropriate portion of some chargeable tax. Assessing officer has to examine whether the application has been made satisfy that the whole or some the sum would not be income chargeable tax in the person. He may include certificate determining appropriate portion of the chargeable under the provision of that for the purpose of tax reduction 195.1. Examination to be conducted while examining the application. While examining the application, assessing officer has taken into consideration following information relating to the recipient. The tax payable on the estimated income of the previous year relevant to the assessment year. Tax payable on assessment assessed or returned or estimated income as the case may be of the previous four preceding year. Existing liability section 1 Income Tax Act 1961. Advance tax payments, tax deducted source or tax collected source for the assessment year relevant to the previous year till the date of making the payment of section 50E. Validity of certificate. The certificate would be valid only for the payment to a non-resident named therein and for such period of the previous year as the may be specified in the certificate, unless it is cancelled by the assessing officer at any time before the expiry of the specified period. Application for a fresh certificate. An application for a fresh certificate may be made if the assessing officer so desires after the expiry of the period of validity of the earlier certificate within 3 months before the expiry thereon. Proceeding format and standard to be laid down of ensuring secure capture and transmission of data and uploading document. The PTGIT system or TGIT systems or the case may be has lays down procedures, formats, standards for ensuring secure capture and transmission of data of uploading of documents. They would also be responsible for evaluating, implementing appropriate security, arrival, retrieval of policy in relation to the furnished section form 15A and issuance of certificate, refund of denying the ability to deduct tax at source section 195, section 239A. Applicability of refund of tax. Section provides that where under the agreement of other arrangement in writing tax deducted income or tax income other than interest, section 195 is to be borne by a person by whom the income is payable, and such person having paid such tax to the credit on the central government claims that no tax was required to be deducted so income, he may be file an application before the assessing officer for refund of such tax in prescribed manner. Borne by the person for whom the income is payable, and such person having paid such tax to the creditor central government claims that no tax is required to be deducted on such income, he may file an application before the assessing officer. Refund of such tax is prescribed in some manner. Time limit of filing application. Such application may be filed within 30 days from the date of payment of such tax. Passing an order by assessing officer. The assessing officer has to, by an order in writing, reject the application, allow or reject the application. However, no application would be rejected unless an opportunity is being heard and has been given to applicant. The assessing officer may, before passing an order, make such inquiry as is considered necessary. Time limit for passing an order. An order has been passed within 6 months from the end of the month in which application of refund is received. Procedure for refund of TDS under section 195 to the person deducting tax in case where the tax is deducted at the higher rate prescribed under the DTAA. CBDT has a circular 7/2011 dated 27/9/2011 modified circular number 07/2007 dated 23/10/2027 which laid down the procedure for refund of tax deducted the source under section 195 of the Income Tax Act. Section 191 the person deduct the tax at source from the payment to a non-resident. The said circular allow a refund to the person making a payment section 195 in the circumstances indicated below, where after the deposit into the government account of tax deducted source section 195. The contract is cancelled, no remittance is made to a non-resident. The remittance is duly made to a non-resident, but the contract is cancelled. In such cases, remitted amount must be returned to the person responsible for election source. The contract is cancelled after the partial execution, no remittance to be made to the non-resident for a non-executed part. The contract is cancelled after partial execution. Remittance related to the non-execution part is made to a non-resident. In the case the remitted amount has been returned to the person responsible for reduction tax at source, or no remittance is made but the tax has been deducted and deposited when the amount was credited to the account of non-resident. These occurs exception of remittance amount of the tax either by amendment or a law by notification under the provision of Income Tax Act 1961. An order is passed in section 155, 248, 267 of the Income Tax Act and reduction of tax and reduction liability of reduction under 195. where there occurs reduction of tax twice from the same income by mistake. There occurs payment of tax on account of grossing up, which is not required under the provision of Income Tax Act. There occurs a payment of taxes higher rate under the domestic law, while the lower rate is prescribed in the relevant double tax avoidance treaty entered into by India. Occurs payment of tax on the grossing above while it's not required under the provision of the Income Tax Act. It is the case mentioned above, the income does not either accrue to a non-resident or it accrued by excess amount in respect of which refund is claimed or borne by the deductor. The amount deducted at tax under section 195 and paid to the creditor by the government therefore belong to the debtor. In the type of classes referred to 1A, the non-resident having received any payment would not apply to refund. You are covered under B1. No claim may be made by a non-resident where he has no further dealing with the resident deducted tax and tax is borne by the resident deductor. The resident deductor was therefore put into genuine hardship as he would not able to recover the amount deducted and deposit his tax. This type clause A, a non-resident not having received any payment would not apply for refund. For the case referred to B2I, no claim may be made by the non-resident where he has no further dealing with the resident deductor of tax, a tax to be borne by the resident deductor. The resident deductor was therefore put to genuine hardship as he would not be able to recover the amount deducted and deposited as a tax. In this type of cases, the reference to the above where no income has accrued to a non-resident due to the cancellation of the contract, where the income has accrued but no taxes due on the income tax on the income or taxes due at the lesser rate. The amount deposited or to the credit of government to the extent of section 195 cannot be said to be tax. Therefore, CBDT decided that this amount can be refunded to the person who deducted in form of payment to a non-resident section 195. The refund to the person making payment under section 195 is being allowed as an income does not accrue to a non-resident or if the income is accruing and no taxes due or taxes due on a lesser rate, amount paid into the government account is the case extent no longer tax. If a resident deductor is entitled for the refund of tax deposit under section 195, then it has to be refunded in the with interest under section 244A from the date of payment of such tax, circular 11 2016 dated 26/4/2016. In the case of refund being made to the person who made the payment section 195, the assessing officer may often give intimation to the deductor adjust it against any existing liability of the deductor under section of the Income Tax Act 1961 or any other direct tax law. The balance amount, if any, should be refunded to the person who made such payment under section 195. Refund in terms of the circular should be granted only after obtaining an understanding that no certificate under section 203 of the Income Tax Act has been issued to a non-resident. In the case where a certificate has been issued, the person making the refund claim under the circular should either obtain it or should be identified by the Income Tax Department for any possible loss on account of the separate claim of refund for the same account by a non-resident. In the case where the certificate has been issued, the person making the refund claim under the circular should either obtain it or should identify the income tax department from possible loss on account of the separate claim or refund on the income tax. The refund is terms of the circular should be granted only if the deductee has not filed a return of income and the time of filing the return of income tax has expired. Refund as per the circular entirely a permanent respect of the transaction of the non-resident which has either not materialized or have been cancelled subsequently. It therefore needs to ensure by the assessing officer that they have disallowed corresponding transaction amount if claimed as an expense in the case of the person paying a deductor making refund claims. Besides, in any cases, the assessing officer should also ensure that it is the case of the deductor making the claim of the refund and a corresponding disallowance of expenses amount representing TDS refund made. The said circular, however, did not cover a situation where taxes deducted tax prescribed manner.
The relevant DTA is higher than the rate represented in the Income Tax Act 1961, since a law required to deduct tax at the rate prescribed by the DTA under the Income Tax Act 1961, whichever is lower. There is the possibility that in the case of excess tax deducted relying on the provision of DTA, according to the order removing a genuine hardship faced by the resident deductor, the CBDT has modified circular number 0707 dated 23/10/27 to the effect that beneficial provided under the circular allowing refund of tax deducted source section 195 to the person deducting tax at source shall apply for those cases deduction of tax in higher rate under the DTA has been made while the lower rate is prescribed under the domestic law.